Hi, entrepreneurs. Ever wondered how forming an LLC could impact your taxes? We're about to dive into a topic that's crucial for anyone with entrepreneurial spirit: the tax benefits of forming an LLC. You see, understanding these benefits can mean the difference between keeping more of your hard-earned money or handing it over to Uncle Sam. We'll be exploring the top 10 tax benefits that an LLC brings to the table. So buckle up and stay tuned to discover the top 10 tax benefits of forming an LLC. Starting off our list at number 1 is pass-through taxation. Now, what exactly is pass-through taxation, you may ask? It's a system where the profits or losses of a business are passed through to the owners, rather than the business itself being taxed. If you're an LLC owner, this means that you'll report your share of the profits on your individual tax return, which can lead to some significant tax savings. Here's why. Corporations, on the other hand, are taxed at the corporate level, and then shareholders are taxed again on dividends. This double whammy is often referred to as double taxation. But with an LLC, you bypass this corporate tax level altogether. The earnings flow through to you, the owner, and are taxed at your individual rate. So what's the bottom line here? Well, it's pretty simple. So with pass-through taxation, you could see significant savings on your taxes. Coming in at number 2, we have limited liability. Now, limited liability is a splendid feature of an LLC that offers you a shield of protection. This feature separates your personal assets from your business assets. This means that if, heaven forbid, your business faces any debts or legal obligations, your personal assets, such as your car, house, or personal savings, aren't at risk. Now, you might be wondering, how does this translate into a tax benefit? Well, with limited liability, the business itself is not taxed. Instead, the owners or members report their share of the profits or losses on their own personal tax returns. This means you're only taxed once on your personal return and not on the business level. So limited liability can be a real lifesaver, offering a line of defense between your personal wealth and the risks associated with running a business. Limited liability can provide a safety net when it comes to your personal assets. Third on our list is the flexibility in profit distribution. You see, one of the biggest advantages of running an LLC is the freedom to decide how profits are divided among members. Unlike corporations, where profit distribution is based on stock ownership, LLCs provide more flexibility. This allows members to distribute profits in a way that best suits their individual financial situations. Let's say, for instance, that a member has invested a significant amount into the business but doesn't need a large income from it. They could choose to take a smaller share of the profits, thereby reducing their overall tax liability. On the flip side, a member who needs a larger income could take a larger share of the profits. This flexibility in profit distribution can result in significant tax benefits, as it allows members to strategically plan their finances. And it's not just about the money, it's about having the power to make decisions that best suit your needs and circumstances. The flexibility in profit distribution allows for a more personalized approach to your business finances. Benefit number 4 is the avoidance of double taxation. Let's delve into this for a moment. What is double taxation? And why should you care about it? Essentially, double taxation is a situation where the same income is taxed twice. This is a common issue that corporations face. The corporation pays taxes on its profits, and then shareholders also pay taxes on the dividends they receive. But here's where LLCs shine. With an LLC, profits are not taxed at the company level. Instead, they're passed through to the members who report the income on their personal tax returns. This is what we call pass-through taxation. So with an LLC, you avoid this double whammy of being taxed twice on the same income. This can lead to significant tax savings, allowing you to retain more of your profits. It's like having your cake and eating it too. By avoiding double taxation, you can keep more of your hard-earned money. Halfway through our list at number 5, we have deductible expenses. Now, this is a biggie. When you're running an LLC, there are a host of business expenses you can deduct on your tax returns. These can range from the cost of renting office space to the money you spend on business travel, and even the cost of your equipment. But it doesn't stop there. Sometimes, even things you might not consider, like a portion of your home used for business, or even your internet service, can be deducted. These are known as home office deductions. Now, all these deductions add up and they can significantly reduce the amount of income that's subject to tax. This means you'll be paying less to the taxman and keeping more in your pocket. So the ability to deduct business expenses, that's a major advantage of running an LLC. Deductible expenses can significantly reduce your taxable income. Number 6 on our list is fewer restrictions on ownership. With an LLC, the sky's the limit when it comes to who can own a piece of the pie. Unlike S corporations, which have a cap of 100 owners and stringent rules about who can be an owner, LLCs have no such restrictions. This means you can have as many members as you want, from anywhere you want. Your members can be individuals, corporations, or even other LLCs. You can have foreign members and members who are not physically present in the United States. This broad scope of potential owners opens up a world of possibilities for investment and growth, without the worry of losing your LLC status due to an infraction of ownership rules. And of course, this flexibility in ownership can provide significant tax benefits. For example, it allows for creative tax planning strategies, such as income shifting. Fewer restrictions can mean more opportunities for tax planning. Coming in at number 7, we have no franchise tax. Now, what does that mean for you? Well, it's quite simple. Most states in the United States don't impose a franchise tax on limited liability companies, or LLCs as we like to call them. This tax, also known as the privilege tax in some states, is typically charged by states for the privilege of conducting business within their borders. However, with an LLC, you're off the hook for this one. This means that you, as an LLC owner, get to enjoy some extra savings. Money that would otherwise be spent on meeting franchise tax obligations can be retained and reinvested back into your business. This can make a significant difference, especially for small businesses and startups where every penny counts. So, by forming an LLC, not only are you protecting your personal assets and gaining flexibility, but you're also dodging the franchise tax bullet. Without a franchise tax, you can keep more of your profits. 8th on our list is the easier transfer of ownership. Now, this is a big one. In many business structures, transferring ownership can be a complex and costly process. But with an LLC, it's different. Picture this. You've spent years building your business, and now you're ready to step back. Perhaps you want to retire or pursue other ventures. The transition can be a daunting task, but not with an LLC. The transfer of ownership can be a tax-free event. Yes, you heard it right, tax-free. In an LLC, an owner can sell their interest without causing tax penalties. This is because LLCs aren't bound by the same restrictions that corporations are. So the transfer of ownership can happen smoothly and without triggering a taxable event. This means you can pass on your business to your successor without the worry of a hefty tax bill. The easier transfer of ownership can make succession planning much smoother. So why not consider an LLC for your next venture? Number 9 is lower audit risk. Now, let's dive into this intriguing benefit of an LLC. The specter of an audit can be a nerve-wracking proposition for any business owner. However, when you form an LLC, your chances of facing this daunting task are significantly reduced. Here's why. The Internal Revenue Service, or IRS, tends to scrutinize sole proprietorships more closely. This is because they often find more discrepancies and errors in these types of businesses. On the other hand, LLCs inherently have a more structured approach to record-keeping and financial management. This is largely due to the legal and tax obligations that come with this business structure. The IRS recognizes this and, as a result, LLCs generally face a lower risk of being audited. So, by forming an LLC, you're not just protecting your assets and enjoying tax benefits, you're also reducing the likelihood of a stressful audit. And let's be honest, who wouldn't want that? A lower audit risk can give you peace of mind come tax season. And finally, at number 10, we have self-employment tax flexibility. Now, this is a benefit that often flies under the radar, but it's one that can bring significant savings. As a member of an LLC, you have the flexibility to determine how you pay your self-employment taxes. You can choose to pay them as a general partner, which means you'll pay taxes on your entire net income, or as a limited partner, where you'll only pay taxes on guaranteed payments. But here's where it gets really interesting. If you choose to pay as a limited partner, you'll only pay self-employment taxes on your salary, not on your share of the LLC's profits. This can lead to substantial tax savings, particularly if the LLC is highly profitable. It's an option that's not available to sole proprietors or partners in a general partnership, and it's one of the key tax advantages of forming an LLC. Self-employment tax flexibility can give you more control over your tax situation. And there you have it, folks. The top 10 tax benefits of forming an LLC. From pass-through taxation to self-employment tax flexibility, these advantages offer significant savings for business owners. Limited liability, flexibility in profit distribution, and ease of ownership transfer further sweeten the deal. Plus, with deductible expenses, fewer restrictions, no double taxation or franchise tax, and lower audit risk, an LLC can truly be a game changer. Remember, every bit of tax savings counts when it comes to running your business. Thanks for tuning in, and until next time, happy entrepreneuring.